Hello, this is EdgeX. I noticed that the price is showing signs of breaking out of the trend line I've drawn, so I expected a decline and decided to film this video. This asset is the E-mini Nasdaq 100 for June. It is for June, and there are current conditions. It should not deviate much from this level, meaning I believe the line I consider as a breakout point is around 35,600, and it needs to turn back down without significantly exceeding that. It must clearly show a downward movement and break the 29,850 line. So to be precise, if it breaks below 29,800 to around 29,500, based on the closing price, and if candles come down to the early 29,000s, I would be almost certain that there's evidence of a downward trend, even though it's not necessarily a good thing. Therefore, if it comes down to around 28,000, I expect a profit of about 1,000 points. And in that case, the stop loss would be around this level. Still, if you set a stop loss at around 2,300 points and a minimum of 1,000 points, the risk-reward ratio would be about 1 to 5. If it reaches the maximum target in the low 27,000s, I think it could be a very good high risk-reward ratio of 1 to 10. Many people try to cut losses after the trend line is broken and a strong rebound occurs, but they often don't. Why? Because of the expectation of a rise. If it gives another sharp drop and then rises strongly again, I should not cut my losses. If I go down again, is the thought that comes to mind. It makes me delude myself into thinking that there will be a rebound anyway. So if it comes back down to the low 29,000s again, I believe I need to respond strongly to the decline. Of course, if my prediction is wrong, it will head towards the previous peak, even if it goes towards the previous high. If it falls back to 29,000 again, my prediction remains the same. My response will also be the same. That's why I decided to start the video. Many people probably thought that this low would break, and that it would naturally break the 28,000 mark. It's called the crowded effect. When too many people in the crowd expect a decline, the market moves in the opposite direction, creating a concentrated and crowded situation. Because so many people expect a drop, it actually rebounds and has risen sharply now. This means that there are many people betting on a decline at this point. And while some of those who got caught in the first wave may cut their losses here if there aren't as many people cutting their losses as expected, it could break through the previous high. I don't know exactly how far this will go, and I've roughly drawn lines on these property walls. But if it goes significantly far or not far at all, I think you should at least consider that. If it shows a return back into this circle, we should strongly bet on a decline, aiming for the first target here. Let's wait and see what happens. Goodbye.